All right, so we're live. We're live on Facebook and YouTube. For those of you that are watching us live, thank you for joining us on this impromptu video with Deepesh, the specialist mortgage broker here at Our Mortgage Broker. You're going to hear more from Deepesh and his insight into the current mortgage market very, very soon. For those of you that are joining us for the first time, my name is Akhil. I'm the founder of the brokerage by the name of Our Mortgage Broker. We specialize in real estate finance with anything regards to first-time buyer mortgages, buy-to-let mortgages, as well as commercial real estate finance as well. Our main office is based in Berkshire. We have a team of 8 specialist mortgage brokers in and around London and the home counties who are able to assist, as I said, with anything related to mortgages and protection advice. So, Deepesh, welcome and thanks for joining me.
Thanks, Akhil.
Good. Just give us a quick snapshot of what 2021 was for you as a mortgage advisor.
Wow, 2021 was just mad, crazy. We had all the stamp duty issues to deal with. The property market was going crazy. Everyone was trying to get in before the interest rates went up. So yeah, it was just a busy last year, and long may it continue.
Well, that's what we like to hear. You're quite nice with those comments. I would have said bananas, bonkers, crazy. We only slept for 4 hours a day, and it was just constantly busy. But the government incentives that they introduced, and you touched on it there with the stamp duty ones. They were a blessing to many. That they could have saved up to £15,000.
Yeah.
On the reverse side, some people may have paid over the value of properties. They overpriced because there was not enough stock available, so they had to pay over in odds compared to other viewers. But again, it's horses for courses in what you're going to do with the property, where you're going to add value. If that is your final home, you might not be too worried about the end purchase price. It's more about being in the relevant town, city, and street that you want to be on, because it's near parents, it's near the ideal school for your family, and so on. So as you said, long may it continue. How's 2022 started off for you?
Yeah, it's been busy. January is good. We've got lots coming up in February as well. So it's been a good start. I think with the interest rates going up and going up even more possibly this year. Mm-hmm. I think everyone's trying to get in and just buy as much as they can before they do shoot up.
Yes,
they will go up again. Maybe several times this year.
Yeah, and that's a good point you raised there. There's a strong indication of the Bank of England increasing the rates further throughout this year, and that's simply just to combat the high inflation costs, which are currently at 5.2% on average. At the moment, it keeps going on month to month. So they think the best way of combating that is increasing interest rates. We're currently at 0.5%, which is the Bank of England base rate. I think, as you say, I agree with you. I think we are going to see an increase in those rates. I think we'll be at 1.5% by the end of this year. But who knows what's going to happen. But the key is, as you said, mortgage interest rates are very, very effective and very competitive at this time. What are you finding at the moment? Are you finding interest rates going up, sideways, downwards? Anything indifferent?
I think they're going up, really. They're going up, yeah.
And it's good that as a team we speak about interest rates all the time, and your view is going up. Now, what I would say is some lenders are increasing their rates, and they're doing it for their own reasons. A lot of the main banks, because they hold deposits, they have to increase their rates in line with the Bank of England base rate. However, if you're looking to buy property in a limited company space, you can find those lenders are very, very competitive and somewhat decreasing their rates. Limited company rates, Deepesh, about a year ago, they were a lot higher than what they are now, right?
Yeah, much higher. Yeah.
So it's nice to see, in the limited company space in particular. So for those buy-to-let investors that are looking for interest rates, don't think that the rates are extremely high in a limited company capacity. They are certainly coming somewhat down, even for a 2 and a 5 year fixed deal. So please bear that in mind. And that's what we're here for as independent mortgage brokers, is to assist in helping you save money and becoming a better seasoned entrepreneur. So we are, as I said, we are live on Facebook and on YouTube. If anybody does have any questions for Deepesh and I, please do put your comments in the suggestions box. Also, if you can just to give us confidence that you can hear us, please like or just put a comment in the box to say, yes, we can hear you. that'll be much, much appreciated. So, Dipesh, if it's okay, I've got a few questions lined up for you.
Yeah,
Hopefully, you
sure.
can share some information with the audience and with some relevant advice. Um, there's huge talk about the energy performance rating being changed in the next 5 to 10 years. What's the new rules looking like regarding the new EPC changes coming up?
So yeah, good question. This I look at a lot of questions people asking about this. So as of April 2020, all let properties, not just new but even existing properties, must have an EPC rating of E plus. So anything from E to A. Okay. If you haven't got this in place, you could be fined up to £5,000. Okay. So and lenders, when we put applications through, and if they hasn't got a valid EPC rating, valuation will come back as zero. Okay, so it's definitely worth having this, not just for the fine, but also, for the mortgage application. The other thing the government are proposing is from 2025 is that all new let properties in England and Wales will need an EPC rating of C and above.
Mm-hmm.
And from 2028, all existing tenancies should also have the EPC rating of C and above. So, it is coming, it is being proposed, and if that does come into play, you need to start getting your properties geared up for a C plus. The other thing the government are also proposing is to increase the fine from £5,000 to £30,000 from 2025. So a huge jump just to make sure everyone is getting these properties to a relevant, a good EPC standard. So these are valid for 10 years. So you don't have to do it every year. So EPCs, when we do supply the EPC to the lender, they've got to have been dated in the last 10 years. So, just a bit of that on the EPC.
Perfect. So just to confirm, any new tenancies need to be A to C from 2025, and existing tenancies need to be A to C from 2028. Now, what I would want to add there is just to make sure those people that are looking to buy to let properties, it's key that you're finding the right property in the right location, buying at the right price. But do confirm, and you can do this by the government's EPC register website that they have got in there. You can put the full postal address, and you can find out what the current EPC rating is. And just try to buy property, I would say, from at least a D to an A, if not a C to A, because some of the properties, especially the early 1900s properties, if you're looking at something like an E at the moment, for you to uplift from an E to a C can be an expensive task, and not just replacing light bulbs. So what I would certainly say is, for those of you that are looking to buy properties, look for a C or above. If not, ensure that you've got someone within your power team that can guide you and advise you what the costs look like from improving it from an E to a C, for example, as a worst case. Now, as Deepesh said, these are considerations that the government have put forward, and they're consulting about it. It's not guaranteed that they will change the EPC rating requirements. However, it's better to do it sooner rather than later.
Mm-hmm.
Deepesh, for those of them that have got A to C EPC ratings currently for any of their investment properties, is there any mortgage benefit to them?
So one, mainly, again, like I said, about the valuation. Valuation obviously will come back as nil if it's not, if there's no EPC. But on the higher EPC ratings, many lenders will have what they call a green mortgage or a discounted mortgage if your EPC rating is C to A. So you will get a slightly better rate, meaning your monthly income, your monthly repayments will be lower, meaning your yield becomes higher. So it's worth doing, and will save you money in the long run. The government estimate average cost of improving a property for EPC is currently about £4,700. What you were talking about earlier is not just about light bulbs, but it is a bit of work to be done, and you're looking at about £4,700 on average to increase your EPC rating to a C plus.
Perfect. Thank you for that. Like you probably, and like I, we all get these every day. We get calls about how do you calculate buy-to-let mortgage amounts using rental income. Can you give us a bit more information on how you calculate rental incomes and what to think about, what the strategy is around the calculation, please?
Yeah, sure. So firstly, as a general rule of thumb, you need 25% deposit. Okay, so although some lenders are doing 80%, and even some even at 85% at a much higher interest rate, you're looking at about 4.5%. at the 85% LTVs. So that's one thing. Generally, get a good rate, 25% deposit, and then the rest of it is based on your rental. So if you're looking to fix it for 2 years, you won't get as much as you would for 5 years. You'd always get a much higher loan amount based on 5 years. Okay, that's one thing. The other issue is if you bought in a limited company name, you generally tend to get a higher loan amount than on a personal name, albeit a higher interest rate. Okay, so you normally get a higher loan amount. So as a rough guide, if you're a basic rate taxpayer, you'd multiply the monthly rental by 12, divide this by 125%, and then divide this figure again by 4.5. Okay, so although some lenders will give you slightly more, generally it's monthly figure times 12, divide by 125%, and divide by 4.5%. That's the stress rating on a basic rate. If you're a high rate taxpayer, very similar. So rental times 12, divide this by 145%, and then divide this figure again by 4.5%. Again, some lenders might give you slightly more, slightly less, but as a general rule of thumb, that's a figure to work on. However, if you bought it in a limited company name, you'd multiply the monthly rental by 12, divide this by 125%, and then divide this figure by 3%. So when you do your calculations, you can see doing this in a limited company name will give you a much higher amount. Okay, so yeah, I mean, those are the figures that you would use to calculate how much you can borrow.
Perfect, thank you. And for those of you that, if Deepesh went through it too very quickly there, it's one of those that you need a pen and pencil and a handy calculator to hand as well. But for those of you that are watching this live, thank you for doing so. For those of you that are watching it on recorded, just rewind to about 10 minutes into this video, and then you can replay it back with the calculations. But it's good to know if you borrow in a limited company capacity, you can certainly borrow a lot more compared to borrowing in your personal name. And the simple reason is because if you borrow in your personal name, it's based on your tax banding rather than a flat rate of 125%. And then the other benefit to borrow more money is to borrow for a longer period of time rather than a 2-year or a 3-year or a tracker rate mortgage. Borrow in a 5-year capacity to get the most out of the rental calculation and ultimately borrow you more money. That's great. Thank you so much.
Just to add on to that, so it's a lot of people don't really know this, but it's not, when you're buying a buy-to-let property, it's not just about your income. It's not calculated on the income. It is purely down to the rental. So it's not, oh, I only earn so much, so I can only afford a mortgage of this much. It is purely down to the rental.
Okay, well that leads me to my next question: is do we need to have a minimum income to purchase a buy-to-let?
So no, there used to be a lot of lenders requiring a minimum threshold of £25,000. Okay, so now a lot of lenders have now gone away with that, although there are some that do require that. But there's a lot of lenders now have no minimum income required.
Yeah.
So it doesn't matter what you could be on a £6,000 income per year. It doesn't really matter as long as you have an income. And yeah, as I said, the rental is based purely on the rental. The loan amount is based on the rental. So you don't really need a huge income to be able to buy a buy-to-let property.
No, that's amazing news. I know during COVID, a lot of lenders pull back on loan to values. They enhance their criteria profile, and they wanted you to have a certain a certain minimum employed income or self-employed income to warrant a buy-to-let mortgage. But it's good to see that lenders are back to pre-COVID levels in terms of loan to values. Interest rates in the limited company certainly are coming down, and they have come down quite a bit over the last sort of 6 to 12 months, which is amazing. The only thing I would want to add is around the minimum income. Now, as Deepesh quite rightly said, there's many lenders that don't have a minimum income. However, you do need to have an income in the background. That is certainly still correct. The other benefit is if you are looking for ultra low / prime rates, there are various lenders that will still need a minimum income, usually typically between 15 and 25,000. So do work with us and we'll hold your hand. Deepesh and our colleagues at our mortgage broker will certainly hold your hand, give you the relevant advice and talk you through the steps to understand about yourself as an applicant, about the property that you're looking to buy, any existing portfolio properties that you own, as well as any other information that you want to share with us. So we'll certainly go through it with you. We like to think it's quite simple to apply and receive a mortgage offer, but we try to make it as seamless as possible. And that's the beauty of using an independent brokerage with a wide range of lenders that we have access to. So thank you so much, Deepesh, for that. Deepesh, there's a lot of activity at the moment around government incentives, in particular help to buy, shared ownership, and also right to buy as well. What's a right to buy property, and what mortgages are available to them?
So right to buy is generally when you buy the property off the council, and you're a council tenant, you've lived there for so many years, and the council write to you to say, right, we can offer you this property at a discounted price because you've lived there for so many years. So they have their calculations of how they do that. So that's the one thing, right to buy. So there's a lot of lenders will give you 100% of the discounted purchase price. Okay, so whatever the discount is, they'll give you 100% of the discounted price, subject to this not exceeding 85% LTV of the actual value of the property. So, for example, if the property value is £200,000 and your discount was 30,000, and the discount, the property discounted price is 170,000, 170 would be 85% loan to value. So the lender would lend you 100% of that. So they would lend you the full £170,000 in order for you to buy the property. So you wouldn't need any deposit whatsoever to buy that property off the council. If the value was 175 or 180 for that matter, you just need to put in the difference. Okay, if it was less than 170,000, happy days, they basically lend you the maximum amount you need. So there is a good incentive there that quite a few lenders are doing, where you can buy the property with 100% of the mortgage on the discounted value.
No, it's amazing, and it's good to see the government still using using some sort of incentive to help first timers get onto the property ladder, albeit with a very small or no deposit possible. So it's good to see the government helping out the young, or the latest generation, if you like. There are other incentives that the government still have available, and I did touch on one is the shared ownership, which means, as it says in the tin, you own a portion of the property via a mortgage, and you'll still pay rent as well. And usually the bar is you'd own about 40% of the property, which you'd apply for a mortgage. The other 60% you'd pay in rent. So that's another incentive. And the one above that, I like to put it in hierarchy, if you like, is the help to buy scheme. And that's, in essence, property that you would buy with a helping deposit from the government. Now, if you're looking to buy property within London and Greater London, you benefit from a 40% helping bonus from the help to buy, which is repayable after 5 years. Or if you're looking to buy a property outside London, you benefit from a 20% helping deposit towards the deposit of the property. So it's 20% outside London and 40% help to buy inside London. For more information, Deepesh has kindly left his mobile number on the screen there. Do contact Deepesh directly for more information on his mobile number. And also you can get more information from our website, ourmortgagebroker.co.uk. If anybody does have any questions, feel free to drop them into the comments box below. I'm just going to bring one on the screen now from Salus. Thank you, Salus, for your question. How long does one need to wait to refinance via mortgage after buying the property in cash? So Salus is asking, I bought a property in cash. Does he have to wait to refinance and I guess pull his cash out? And if so, how long before he must wait or doesn't have to wait? Deepesh?
So generally, there's a lot of lenders will do what they call a day one remortgage. So there's a handful that do them. Some will generally need a minimum of 6 months for you to register on land registry, after which you can then, once it's 6 months of land registry, you can then look to apply for a remortgage.
Perfect. The beauty about buying properties in cash, and I understand why people do it, because they might have bought it from an auction, might have bought it from a vendor that wanted to urgently sell it and didn't want to wait for someone to get a mortgage, and I totally get it. Now, for those of you that are looking to buy, take advantage of using your own cash, and I understand as property entrepreneurs, you want to refinance, pull the cash out in order for you to go shopping again, not to buy a car and watches and all that sort of stuff, but another property perhaps. You can do so, as Deepesh said, within the 6 month period, albeit on day one. The best play is usually doing it after 6 months, and that gives the land registry to be updated. It gives the lender confidence that you bought it and it's been receiving income for 6 months. The way you'll get around it is potentially using a lender that accepts day one remortgages, and there are various lenders that do that. And the other way of increasing your chances is if you've added value to the property on day one as well. So let's assume that you bought a property for £100,000. You've done a what we like to call a tart and turn, in terms of you've added value to the property by replacing a kitchen, a bathroom, paints and carpets. Let's say you spent 20,000 on the refurb of the property, and you now brought the property up to the right street value of 200,000. Well, it's quite easily evidence that you've spent the money, because you've got the before and after pictures, as well as the invoices and receipts. And we, on your behalf, can share that with the lender to quite clearly state the value uplift and the reason why we think the house is now valued at 200,000, for example, which then gives the applicant the chance to refinance at 75% of the new current market value, rather than just the purchase price. But do contact Salis if you've got more questions, or anybody else watching this. Do get in touch with Deepesh there for more information, and he'll quite happily be able to support you and advise you further. So thank you very much for that. On Facebook, thank you Abid, thank you Falak, and thank you Sunny to your comments there as well, much appreciated. Anything you want to leave us with, Deepesh?
No, just if you're looking to buy a property, get them in soon. Interest rates are going up, so get them in soon, fix them in for 5 years, and then get back in touch with us in 5 years' time, and we'll remortgage them for you.
Yeah, and I certainly agree with that. I think the key here is to look at these. This is probably a question more directly to portfolio landlords. Actually, you know what? I take that back. Anybody with a mortgage, whether you've got your own residence only, or you've got a large portfolio of 2, 5, 10, or 100 properties, now's the time, if you haven't already, is to review all your finances. We're going through, obviously, COVID as a pandemic. Interest rates across the world are on the upward. Who knows when they're going to happen or how steep the upward curve is going to be. But now's the time that you need to really analyze your portfolio, understand the cash on cash return, as well as the cash on investment return as well. And for those of you that have got mortgages coming up in 2022 for renewal, anytime in 2022, please contact us directly. We won't, it's a fee-free consultation, so there's no obligation on any fees. We won't charge you anything upfront whatsoever. The key is to work with you, understand your portfolio, understand your goals, and most importantly, ensure that you move on to the most competitive rate at the right time, which then avoids you moving on to the standard variable rate. Let me just bring in one more question we've just got come in from Naisha. Can you challenge a valuation after you have renovated a property? Do you want to give it a go, Deepesh?
So, yes, technically you can. The lenders do have a form that you need to fill out. You've got to basically have 3 comparisons, or the evidence, the 3 different comparisons as to why you think your property is worth that value. Sometimes, if you've done extensive work, we can go back to the lenders with the list of work that you've done, previous photos, current photos, and basically just evidence the amount of work that you spent on the property, and they can take a view on it. There's no guarantee that they'll agree to it, but it is always worth a try.
Yeah, no, nicely put. The only thing I would add to it is, when you tell us as your mortgage advisors what the current value is, what the rental income is, do your homework in terms of the valuation, in terms of, is it the true value on the street or within the local community that your property can be valued at that level? If not, please have evidence that the reason why your property stands out, and that could be by way of how you've added value to the property recently, and or before and after pictures. We'll certainly point you in the right direction, ask the relevant questions, and then share that on your behalf to the lender. But as Deepesh said, ideally, if you've got 3 recently sold valuations from local agents, that will certainly be helpful. And it's got to be usually within a half a mile, or at the maximum within a mile of the security address itself. But Naisha, thank you for your question. Hopefully that answers it. If you've got anything further, do let us know. Thank you. Deepesh, thank you so much. I know you're really, really busy. We're 25 minutes in, so thank you for joining me on the call this afternoon. Hopefully that's been helpful. to the ladies and gents that have been viewers here live on Facebook. We've got a ton of likes and tons of viewers on here as well, which is really, really nice to see. If anybody does have any questions, you can contact Deepesh on his mobile number. You can drop an email into the office. We're all over social media, Twitter handle, LinkedIn, Instagram, Facebook. I think the only one that we're not on at the moment is TikTok, but I think we're going to give that one a miss for the moment, right, Deepesh? So we're going to give that one a miss. But anybody wants to contact us, do so. Please contact us on social media. We've got a YouTube channel as well. It's called Our Mortgage Broker. Please share it, like it, subscribe it on YouTube and Facebook. We enjoy what we do, and it's all about giving information back to you guys as property investors and the alike. As I said, if anybody's got any further questions, please do drop them in the comments box and or via social media, and we'll do our best to answer them. Once again, thank you, Deepesh, and look forward to seeing you again.
Yeah, no worries. Thanks, Akhil.
Thanks, guys. See you soon.
Cheers. Bye, guys.